How do you do, ladies and gentlemen, and welcome to today's session. It's 9 o'clock GMT, Tuesday, the 12th of May, 2020. Today we're going to talk about the, we're going to start off with some unusually frightening news from no less than Wuhan, Hubei province, China. There's been a re-emergence. And this is, after all, a place that that was a poster child for draconian um, restrictions on movement in order to control the virus, and they succeeded. Well, if you believe them, and you can't really believe much of anything they say. But there's a new outbreak. There were 96 cases, I believe, recently reported in Wuhan today. No, excuse me, nine new cases. But if they discover nine, there's 90 hidden behind the bushes. Um, and places like Singapore are seeing emergences, and it's probably going to happen for the rest of the world because starting about the 3rd of May, a week ago Sunday, restrictions will begin to be lifted around the world. And and what I want to point out is that there's tremendous volatility remaining in the markets. If we take a look at the DAX, for example, you're going to see, and this is really something we have an opportunity to trade on for a while. This is the fall when the outbreak became known, falls down. This is the Fibonacci retracement. You see that it penetrates the 50% retracement mark once, twice actually. It can't do it. The volumes are falling. This is going to likely fall. This, by the way, is the last, call it 3 weeks. And this is, as it appeared to, as more and more people were pumping the ideas into the minds of the public that this could be a V-shaped recovery. Here it goes down and up. As our little V is nonsense. This is what we call a dead cat bounce. This means that the thing is falling and dead. It fell on tremendous volume here. And it reached some sort of control. This, by the way, again, is the DAX. It reached some point where people bought in, and then they continued to buy in, and there was some fairly steady buying, but nothing compared to what it was on the fall. But it can't retrace, and as the um, infection rate goes up again, as the results of restriction easing become apparent, this is going to fall again and likely break this point quite easily and quite sharply and quite quickly. So I just want to make you aware that the pitch for your clients, the pitch we want to be talking about, the approach that we want to take as traders is keep the counts up because there's going to be great sell-offs. We want to be in on the ability to sell short. Remember, we're a derivatives company. We sell CFDs. We can make money going short. We can sell short. If the price is falling, we sell short. And when we buy it back for less than we sold it for. And that is our profit. And it's something we need to become much, much more familiar with and much more willing to convince and teach the customers about, because that's how we're going to make money in the next sell-off. Let's take a look at a few of the major, and this is the DAX, of course, on the Fibonacci. It's dancing at 50 and really can't do much. In fact, it can't get through at all. We'll take a look at let's take a look at the S&P, of course, the benchmark U.S. index. Same thing here. There's the big fall. It goes up. You see, it's on declining volumes. There's less and less. And here, this high is now lower than this high. Up till now, we had an uptrend. This is the technical higher highs and higher lows. Here we have lower highs, and we haven't gotten to the lower lows yet. It's not a downtrend, but what I guess a technical trader would call this a flag or a pennant forming up. And as it eases over channel and narrows into the channel, it's likely to break out one way or the other. And I would say from the volume, it looks like it's likely to break down. So there's room for weakness here. Again, if you take the dead cat bounce, no, this is not a V-shaped recovery. Look at the I won't go back too much into history, but I do advise and suggest that people who have a little time go back and look at the Dow Jones Industrial Average charts from 1929, 30, 31, 32, 33, to get a sense of what this is likely to look like. And then the last thing I do want to point out is the Singapore. No, same story. This of course is the overnight trading. There's no volume, but also in the East, there's sense that it's going to go somewhere It's not. It doesn't have any more upward energy. The upward energy is run out. Um, Yes, just another. I want to take a look at the dollar index as well. The dollar index has been holding steady. It goes up, it goes down, but this is when the virus became known and understood to most people. The dollar gains tremendous strength from 94 to 102. Gives back about half, and then has been staying in this zone here for a while. This is likely, though, to give back even more again once the U.S. sees its. The U.S. already is the world's most has the highest death rate in the world. It's likely to go. It's likely to skyrocket once the second wave thing takes hold. And so again, it's another great shorting opportunity. The dollar index is likely to weaken considerably more. And then let's just take a look at a few of our key commodities. Oil is likely to continue its falls. We've seen some strength. Again, this is all based on what strength? Yeah, I know there's some strength. Let's take a look at the daily chart. Here's the fall in early January where it starts to decline. We see this rise. This is the last, call it the last 2-3 weeks trading as we've seen in the indexes as well. The sense that we can get back to V-shaped recovery. The airline people start traveling again. You know, I don't think so. It's once again once we get the second wave becomes clear, there'll be additional selling off. The airlines are probably going to be able to buy all of Delta Airlines lock, stock, and barrel for $1 million. Probably buy their planes wholesale in lots of 5 for $100,000 a piece. That industry is large. Take a look at the Google satellite photos around in the Caribbean. Um, there are just these parking lots of ocean liners lying up empty. We're not coming back. There's no V-shaped anything here. It's going to take a long time. And again, it's likely that oil's going to fall. While the Saudis did cut back or started to cut back in their May production by a million barrels a day. The Russians, haven't confirmed. They haven't announced. The Iraqis are still pumping like crazy. Nobody's announced. They haven't said who's going to take what hits. The whole thing is a little bit not clear. And yes, the shale oil pumpers are cutting back in their well count, but nothing compared to the fall off in demand. That's the key. So long as all of these cutbacks are smaller than the total fall in demand, they're still making an oversupply. Despite the fact that they're cutting back production, oversupply is the market mode. And when this is a commodity. It's pretty hews pretty closely to the supply and demand models from high school economics. As the oversupply grows, price will fall. And there's a lot more for this price to go. And maybe one day we'll have a session on the price war initiated by Saudi Inc., but not now. So there's room for oil to decline. And the last chart I want to take a look at this morning is gold. Is the gold price? Excuse me. Gold has been doing virtually nothing. Here it is. That's the gold in euros. Doesn't matter. It's the same chart really, but the gold is not priced in euros. Gold is priced in dollars. And it's really been doing nothing here. 1700, 1704, 1715. Not too much. Here, of course, was the big rise that we saw. Again, the same. This is the same date from. This is all Corona City, and so gold isn't doing much at all. So it's hard to advise anybody to take gold, but the trades are oil short. The index is short. Dollar index is holding steady for the time being, and it probably will fall once the U.S. weakness becomes apparent again. Where the money will go, it's going to go to cash. It's going to go to bonds. Let's just take a quick look at the bond market. You'll see what I mean. These are bond prices we're going to look at, and you'll just see that they are. Oh, sorry, that they are. Here I just did this. They're up. Again, and this parallels. This is about the time of the once the easing comes in, once these governments start to buy in, the prices go up because they're bidding the prices up. So that's where the money is going largely. The only thing that's being purchased on any large scale are these government bonds and notes. We sell the Euro bond, which is the German government 10-year, and the U.S. 10-year note. And those are pretty obvious and reliable plays. So with that, ladies and gentlemen, I will call today's session to an end. I just want to make you aware that we've got French and Arabic subtitles, so that any French and Arabic speakers will be able to see the text in subtitle. So for all of us here at the shop, trade with confidence today. Bye bye.